Hi, hello friends. Welcome everyone to Nifty Banker 2.0, India's first retail index traders online conference. I'm Ashok Devanapriya, the CEO of Traders Gurukul and also the host for your today's program. It's almost 10 days that we started this amazing journey of Nifty Banker 2.0. People are joining in large numbers even today, which officially shows the enthusiasm that lies within in pursuit of knowledge. But before we begin, I would like to appreciate our media partner, Money Control Pro, the largest financial portal in India with millions of daily readership on their website, and also our official title sponsor, Espresso from the family of Sher Khan, one of the leading discount brokers in India. The speaker for today is my good friend, Harish Kumar from Bhopal, who's a chartered accountant and a trader by profession. He's a technical trader, positional price action trader. He officially trades using supply demand concepts by merging Bollinger Band concepts. He's actively trading ever since 2015, one of the well-known and responsible trader in my community of traders. Today, he is going to empower us with his special topic, the Bank Nifty strategy for disciplined traders. My dear Harish, on behalf of Traders Gurukul, Money Control Pro, Espresso, I would like to extend my warm welcome to you into this program as an elite speaker. Go ahead, my friend. The stage is yours.
Thank you. Thank you so much. Thank you so much, Ashok sir, for such a nice introduction of mine. And yeah, hello friends. A very good evening to everyone. I hope and wish that you are taking a good care of yourself and your family and fighting with this deadly virus strongly. So I'm a small trader actually. I'm trying out to collect some drops from an ocean of the stock market in terms of daily learnings, observations, and of course some money also. So basically, as Ashok sir told, I'm a demand supply trader who looks at demand and supply equations to decide a trade. And mainly, I'm into this Bollinger Band thing. So I, do demand and supply trading along with Bollinger Band. So I love to discuss different ideas, and I believe that I'm also learning when I'm teaching something. Actually, the best way to learn something, is to teach the concept. So with this approach, I'll be talking to you on some concepts, ideas, observations, some strategies, some learnings. And believe me, I also keep a notebook and pencil with me while delivering any webinar, because you get many lovely ideas also while teaching something. So that's a habit which I'm into. So this is the second last session of the event, and I hope you are enjoying a daily dose of learning. So with this, let's start today's session. So I'm Harish Kumar. I'm a chartered accountant and a trader. So this is my introduction I have already given. So let's not give much time to this. So today's agenda is I just touch upon some topics. I know many of us are already aware of this, but to set the momentum, I'll just go through some basic topics initially, and maybe there could be a single person who is just interested in these basic topics as well, right? So we'll just go one by one. We'll just spend few minutes on what is options, what is option buying, option selling, types of option selling, benefits, limitations, option strategies. So what things you require to become a successful option trader, so characteristics of a profitable option strategy, and then we'll discuss our strategy. I'll just explain it. Thereafter, the last will go to your queries and discussion. This is the general disclaimer. So what is an option? Option is basically, it is just another asset class of a derivatives which derives its value from an underlying asset, right? It is a contract giving the buyer a right but not the obligation to buy or sell the underlying asset at a specific price on or before a certain date, that is expiry date. So there are two types of options, American and the European. So in European, we follow the European style, where you have got an expiry, and on the expiry, you have to exercise the option if you are a buyer. So people use the options for hedging consistent income and to speculate. Now, what is how the option price is calculated? It is basically the intrinsic value plus time value. That is, we also call it extrinsic value. And our intrinsic value is current market price minus strike price. So suppose if the current market price of a stock is 1000, sorry, if the current market price of a stock is 1025 and you buy a call option of 1000 rupees at 80 rupees, right? So the intrinsic value in this case will be 1025, which is the current market price, and the strike price, which is 100. So out of 80, 25 is your intrinsic value, and the remaining value, that is 55 rupees, this is your extrinsic value, or we can say that this is the time value, right? So intrinsic value is basically current market price minus strike price, and extrinsic value, that is time value, is option price minus intrinsic value, as we discussed in this example. And this extrinsic value, it is comprising of few Greeks, that is delta, gamma, vega, theta, and rho. We will not go in much details, otherwise it will eat our time unnecessary. I'm just skipping this slide. Option buying versus option selling. Suppose option buyer, who is an option buyer, who buys a right to purchase or sell an underlying at a specified price at a specified date, that is expiry. And against this exercise, against this thing, he pays some premium. He has a limited loss, but unlimited gain. It works as a good hedge of portfolios. So suppose if you are having a portfolio of rupees, suppose that you have got a portfolio of 20 lakhs, so you can buy a put in turbulent times, so that your portfolio is hedged every time. So the benefit of this is premium, the margin requirement is very small. And how it is calculated? So what premium you are paying multiplied by lot size. But what is the problem in the option buying? Because the inherent winning probability is 1/3. So out of 3 times, your probability of winning, the inherent probability is 1/3. And the more than 80% option expires worthless. Option buyers betting against the big money, who normally are the right of the most time. And who is the big money? Who sells? What an option seller does? So when you sell a right to purchase or sell an underlying at a specified price at a specified date against some premium, so it is an obligation. Option buyer has a right, but option seller has it is an obligation for him. He has a limited gain possibility, but yes, he can face unlimited losses as well. Big margin requirement, approximately a future margin requirement. But why everyone is going after this option selling these days? Because the inherent winning probability is 2/3. So the option buyer has a winning probability of 1/3, and option seller has a winning probability of 2/3. More than 80% options expire worthless. So this is an edge for an option seller. So you are trading in the flow with the big money, who normally are right most of the time, right? So whom would you would like to go with? Obviously, option seller. The types of option selling means either we can be a directional player or non-directional player, right? So we can sell option in both conditions. If we are bullish, we can buy call, or we can sell put. If we are bearish, we can buy put or sell call. If we are indifferent of the trend, suppose we think it is in our opinion the market will not go uptrend, will not go downtrend. So what we'll do, we can sell both of them. We can sell both options, call options and put options. So in directional, it is basically trend following, good for directional players who has some bias to the direction. Bull calls, you can just go through this: bull calls, bull puts, bear calls, bear puts. Instead of future buy sell, trader uses option for desired direction. In naked option selling, more risk with more return. And what's there in the non-directional thing? It works where no strong trend is observed. 70% of times the market moves sideways, and market is in trend only 30% of time. So for the rest of 70% of time, the option seller, or the, we can say the non-directional option seller, is the king. Traders bet on the volatility contraction, theta, decay, etc. So suppose you see that the normal volatility of a stock is 50 and now it is around 90, so you would love to sell that on. Good for traders who wish to earn consistent returns, although less than the directional one, because in directional your returns can be more than what a option seller who is in non-directional. So there are few strategies available in the market like this. I think every one of you must be aware of all this. So let's go to the next slide. So what is the roadmap to the option selling? The first steps to the option selling. So first is the patience. Patience is the basic, it is basically the key, whether it is an option selling or buying or equity trading investment. You must have patience even before taking a position. When you wait for your setup, and after getting into the position, to patiently hold the winning position, which is sometimes very difficult. Because it is very difficult to keep holding a profitable position. So where patience is required. The second thing is discipline. The stock market is a game of discipline. It takes the time from indisciplined or impatient traders and gives it to disciplined traders. It is a well-known thing. Next is consistency. So you have to keep repeating what you are doing, right? So while doing option trading or any trading, in fact, you'll face drawdowns for days, for weeks, but you have to be brave enough to consistently follow your tested strategy with conviction. And believe me, it is a real test of trader to keep on going. So the next thing is diversification mindset. So sorry, the next is simplicity. There is a myth that complex things are superior. So with my own experience, I observed that simple things do wonders in stock markets. So don't over complexify the things. Just try to keep them simple. So the next is diversification. What do I mean with this? So when you gain some experience, you should have multiple strategies with you, a basket of some which you can deploy simultaneously to have consistent income with lesser drawdown. So if some strategy of yours giving you loss, so another few strategies can handle the loss, and in the month end you can come into good profits. So this is the main thing in the option trading. So what is the ideal option strategy characteristics? So first of all, there should be an edge. So what do you mean by an edge? Actually, trading is too much competitive task, as you all know. And you have not only to work hard, but you have to work smart also to have a technical, psychological advantage, strategical advantage over the others. So this is the basically game of the survival of the fittest. So this smart work which you deploy, or this advantage over others, this is your edge. And how you can have it? You can have it through education, lot of practice and experience, obviously. So suppose if I know how to analyze a chart, not 100 with 100% accuracy, if around 60-65% accuracy, if I know how to analyze a chart, I have an edge. If I know how to analyze an annual report, this is my edge. If I know how to analyze the open interest, so this is my edge. So this is all about the profit. Next is profitability. So obviously we are here to make some profit. So your strategy should be profitable in the long term, because we are not trading, or we are not trading for some right thing that we are right. We are here to earn some money also. So it should have some favorable win ratio that we call as a hit ratio also. So not a standalone phenomena. It is not a standalone phenomena. But yes, it is important. If you are playing with a 1:1 risk reward strategy, you must have a hit ratio of at least more than 50%, to gain some profits in long run. Obviously, there are some other variables also. So Next thing is risk reward ratio. I think you know that risk reward ratio. So next thing is max drawdown. So what is a drawdown? So let's understand it with the help of an example. So it is basically drawdown is a reduction in capital measured from peak to trough. So max drawdown is maximum of all drawdowns. So suppose you start with a capital of 5 lakhs. After a few months, your capital, you have earned some profit, and now your capital is 5,50,000. Now there are series of losses, and your capital is reduced to 4,75,000 suppose. So this is your this 75,000 rupees is your drawdown here. Now again your capital becomes 7 lakh after a few months. So this is a new peak for us, and we will be calculating the new drawdown if it happens from this point only. So until we cross 5,50,000, we will remain in the drawdown, and as soon as we cross this 5,50,000 benchmark, our new peak will be there. And if it happens that we incur some losses, then we'll calculate these losses from this new peak, right? Suppose after a few months, you again incur some losses and your capital becomes to 4,80,000. So the difference of between this peak and this trough, that is 4,80,000, this will be your new drawdown. Now suppose you earn some profit and your capital becomes 5,30,000. So this is not a new peak. So we are still in the drawdown of this 7 lakh from 7 lakh to 4,80,000. Now suppose you lost your capital again and your capital is now 4,50,000. Now your new drawdown will be 7 lakhs minus 4,50,000. So what is your max drawdown here? Your max drawdown will be 7 lakhs minus 4,50,000. So what is, so is it so important to know about this max drawdown? Yes, because you are a trader only if you have capital to trade. You have to manage your drawdown, because it takes more effort and time to recover the loss to gain. To recover a loss of 10% on capital, you need to earn 11%. Likewise, to recover a loss of 50% on capital, you need to earn 100%. And to recover a 75% on capital, you need to earn 300%. So this is very important. So how we can manage it? In fact, if you are deploying a strategy which requires 4 lakh of capital and drawdown is 50,000, so you should keep your margin as at least 4,50,000. Yeah. So this is how you can manage your drawdowns. You can keep stop losses with you. You can trail your losses. Position sizing is very important, because suppose why it is so important. Let's understand this with an example. Suppose Mr. X is there. He has a capital of 1 lakh rupees. He buys a, suppose a Reliance call option at 100 rupees. A lot size I think 250. So how much the premium he has paid? He has paid 250 multiplied by 100. That is 25,000. So what max he can gain? Unlimited. But what max he can lose? 25,000. Which means in one loss, 25% of his capital will go vanish in a single trade. But suppose there is another trader, Mr. Y. He has a capital of say rupees 20 lakhs, and he buys the same strike at 100 rupees with 250 with the lot size of 250. Now his max loss will be 25,000 on a capital of 20 lakhs. I think it will be around 1% or so. So he is losing only 1% of his trade. What can we say? Mr. X does not have proper position sizing, but Mr. Y has. Risk to reward ratio, I think you know the famous example, this coin flipping example. This is a very famous example for this thing. So suppose let's have a deal that if you flip a coin, what is the probability of getting a heads? It is 50%, as we all know. So what if I say I'll give you 100 rupees for each head, but take 100 rupees from you for each tail? So is it a profitable business for you? No. But suppose I say I'll give you 200 rupees for each head and take back 100 rupees for each tail, then it is a profitable business, despite of it being a 50% profitable, oh sorry, 50% probability. It is having 1:2, it is having probability of 50% because heads 50%, tails 50%, but here risk to reward ratio is better. So this is a profitable business for us. Then hit ratio. So it is fine when I'm giving you rupees 200 for each heads and taking 100 rupees for each tail. But what if I give you independence of changing the probability into your side? So I just keep the reward same in both situations. So you will definitely want to take the odds into your favor. You'll try to change the probability into more than 50%. So you will try to keep the probability as much as you can. So basically, if trading is if suppose trading is a FM radio, then you need to set the frequency by using all these facts: SL, trailing SL, position sizing, risk to reward ratio, hit ratio. There are no set rules for all this. You just have to keep moving the radio button to set the frequency of all of this. Just wait. Yeah. So we will discuss the next drawdown. The next thing is expectancy. I think this is the most important thing as far as the strategy is concerned. This is the most important. So this is basically over a long period of time, what amount of profit you are expecting per trading day. So you are earning 2,000 a day and you are losing 500 another day. So what is the average? Suppose you are applying a strategy, you are using a strategy for a longer time horizon. So what is the amount of profit per day you are expecting? So this is the expectancy. So how we calculate this? This is the average gain on a green day. Green day, I mean when your P&L is green, you are profitable. So what is the average gain on a green day multiplied by hit ratio? So suppose your hit ratio is 60% and you earn profit of we have an example here. So suppose if you gain 2,500 on a green day and lose 1,500 on a red day. Red day means the losing day, and the accuracy is 40%. The accuracy of your strategy is 40%. So your expectancy will be 2,500 का 40% minus 1,500 का 60%. That is 100 rupees. Or if you want to calculate the expectancy ratio, that means 2,500 divided by 4,000, that is 2,500 plus the loss, average loss, right? So 2,500 divided by 2,500 plus 1,500 multiplied by our accuracy minus 1,500, that the loss on the average loss on the losing day multiplied by 60% divided by 4,000. So your expectancy is 0.23, expectancy ratio is 0.23, and your expectancy in terms of in absolute terms is 100 rupees. So you can expect to earn 100 rupees daily on an average if you trade the strategy for a considerable period. So with this, we just move to our strategy. So I have given this strategy name as Prosin. Why this name? We'll just know after a few minutes. So in stock markets, you must be doing or listening that people are doing straddles, strangles in their style. Few will be doing at 9:20. If you are doing at 9:30, if you are doing at 9:45, 11. If you are keeping the SL of 25%, if you are keeping that 30% or 40%. So there are many variations of straddles and strangles. So these are non-directional strategies, and we know that market has 70% times not in trend, not in trend. So these intraday strangles and straddles, they are in profits around 65 to 80% accuracy. So suppose what if we get a sense of direction, we can we can we can tweak our strategy into that direction only. Suppose a person comes and tell you at around 940 945 कि आज बैंक आज निफ्टी ऊपर उठेगा और today bank nifty will be strong, so it will be good for us. We can tweak the strangle or straddle accordingly, right? And suppose what if I can sense out of this nifty and bank nifty कि आज कौन सा strong रहने वाला है, bank nifty or this nifty. अगर हमें ये पता लग जाए, then we can trade accordingly. So what people do, they basically do either in nifty or bank nifty. But हम यहाँ पर क्या करेंगे, we'll just trade in both. But how will we sell the straddles of both the indexes? No, we just do that according to the relative strength as compared to each other. So whatever index will be stronger, we'll just sell the put of particular index, the ATM put, and the weaker index, for weaker index we'll just sell it. But how will we decide the strength? How will we decide the strength? Will it be on the basis of some charts or something else? No. I have done a very simple thing for you. It is very easy. So let's start. So what we'll have to do? So first of all, the margin requirement for this strategy is 4,50,000. Actually, it is less than 4 lakhs. I think for these days it can be more than that also due to volatility during this budget time. But actual margin in normal circumstances it is around 3,80,000 or 3,90,000. And the drawdown in this strategy is around the max drawdown. Actually, it is around 34,000. So what I have done, I have just kept the margin as the actual margin requirement from the NSE plus the 1.5 times on the max drawdown, that is 34,000 multiplied by 1.5 plus the actual margin requirement. So this is what I have done. An instrument will follow the strategy, will just follow the strategy through options. Conditions will be, we'll sell the PE of stronger index, put option of the stronger index. We will sell the call option of the weaker index. And what we'll do, we'll just trade 2 lots in bank nifty and 1 lot in nifty only. So suppose on a particular day the bank nifty is strong, we will sell 2 ATM puts of bank nifty, and opposite of that we'll sell 1 call option of the nifty. Suppose nifty is strong, we will sell 2 lots of bank nifty call option and 1 lot of nifty put option. So we have to sell put option of the index which is stronger than the other, but we have to sell 2 lots of bank nifty whether we are selling put or call, right? We don't have to trade if the gap is more than 1.5% in nifty, that too in spot. What if the bank nifty is opening more than 1.5%? I think 98, 99% cases will be covered when the nifty is opened the gap up or gap down of more than 1.5%. The bank nifty also does the same, but it is not happen every time. So we'll just keep it as it is. We will not trade on the day when nifty has given a gap up or gap down of more than 1.5%, despite of what the bank nifty is doing. We'll just ignore it totally. And the base price will be 915 open price. So what is this base price? We'll just understand with the help of an example. Our entry time will be 9:45 AM. Stop loss will be 25%, and you can keep your stop loss as per your convenience. Exit time will be 3:10 PM. You can keep it as per your convenience too. So if you want to exit your positions at 3 p.m., you can exit that. Some profit will be it can be increased, or it can be reduced also with this change in time. But it should be made very clear that 1-2 minutes delay will not have much impact on your strategy if you follow the same time for a larger horizon. So if you are exiting at 3 p.m., so just try to exit at 3 p.m. all the days, in fact, for a longer term. So if you are entering at 9:40, so just try to do it daily. Hit ratio will be 55%. Max drawdown will be 34,000. Return to MDD is 7.78. So what does the return to MDD means? It is basically a ratio which helps to decide that whether we should go, whether we are ready to take a risk of X amount to earn to generate an income of Y. So basically, it is a term used by the investor. If they are having 3-4, suppose they are having 3-4 options. So out of these 3-4 options, if you wish to go for one, so he'll just calculate. The person will just calculate the return to MDD ratio. We'll understand this also in the further slides. And in 3 years, in 2019 to 2021 calendar years, we have earned around 8 lakhs from this strategy. And the profit days, that is the green days, they are fetching us 4,600. And the losing days loss is around 3,000. So our expectancy is 1240. So you can expect a sum of rupees 1240 every day if you are using this strategy for a longer term horizon. So this is the margin requirement. I have just kept this slide for you guys. So this I have taken from Zerodha. You can use any broker. So for this, around 3,90,000 margin, it is asking for this. So we are keeping the margin requirement as 4,50,000. We are just for one set we will keep 4,50,000 aside. So how to practically trade this sheet? Just a minute. So I have just prepared a decider sheet for you. It is an Excel sheet, nothing else. So what we will do? Let me show it to you. Yeah. So at 9:15, you have to fill the open prices of Nifty and Bank Nifty. That is spot price, not future prices. In this field, at 9:15, you see that market is open at 9:15. You will just fill the Nifty open price and the Bank Nifty open price. And at 10:15, not 10:15. Sorry, this is not 10:45. This is 9:45. Just wait. At 9:45, at 9:15, you have filled the open prices of Nifty, Bank Nifty, spot. So keep waiting at around 9:42 and 9:43. Check the ATM strikes of Nifty and Bank Nifty. You will just check that what is the ATM strikes for Nifty and Bank Nifty right now. You will decide the call option, put option of ATM strikes of both Bank Nifty and Nifty at 9:42, 9:43. You are doing this because it will not have much impact at around 9:45. Yeah, it happens, but you have to be ready at 9:45 when your prayer entry time starts. So what you'll do, you will just keep them in watch list or basket. You can just make the basket. At 9:45, you will fill the close price of 9:30 candle, that is 15 minutes candle, in the decided sheet. What you will do? Suppose Nifty open at 17,062 and Bank Nifty opens at 37,058. So I'm again telling that these are not the future prices. These are the spot prices. At 9:45, suppose 9:30 candle, 15 minutes candle, it closed and the Nifty 930 candle closed at 945 at 16964, and the Bank Nifty candle 930 candle that is closed at 37,163. It will calculate the change of both the indexes, so it will calculate automatically. What you have to do, you have to sell call of this. So what this sheet is doing, we are just taking the base of open price, and we are calculating that from the open price which index is strong, not from the close last day. So we are just calculating the relative strength from the open price. So we took the open price, we calculate how much journey Nifty took from 915 to 945. So we observed that it is down minus 0.57%. Bank Nifty opened at 37,058. It took a journey till 37,163 at 945. So we observed that the Bank Nifty is in green by 0.28%. So what is this telling? That Bank Nifty is strong, Nifty is weak here. So what we will do as per our strategy, we will sell the put option of the stronger index, that is Bank Nifty. And which put option? Will sell the ATM call, sorry, ATM put, that is 37,200. And we will sell the call option of Nifty, which is the weaker index. ATM is 16950. You just sell 2 lots for this. Bank Nifty, we have to sell 2 lots. We have to play in 2 lots every time in Bank Nifty and 1 lot in Nifty. So what we'll do, we'll just sell 1 call option Nifty of 16950 and 2 put option of Bank Nifty of the ATM 37,200. This is what we have to do. So let's understand this once again. Open the decider sheet. This sheet I'll just forward to Ashok sir, and or you can do one thing. You can just take a screenshot of this also. You can just create this sheet. You can just take a screenshot of this. What formula I have given to this sheet. Yeah. So take the decider sheet, note down the 915 price for both the indexes, Nifty and Bank Nifty. Keep waiting at around 942, 43, and if you think that you are fast at 944, check the ATM strikes for Nifty and Bank Nifty. Decide the call option, put option of the ATM strikes of both Bank Nifty and Nifty, and remember these are the spot prices, not the future prices. Keep them in watch list at 945 till the close price of 930 candle that closes at 945 in the decided sheet, and execute. Place the stop loss and forget. Don't forget to place the stop loss. Stop loss is very important. Just a second. So I'm just giving you 2 minutes. Yeah, let's go further. So this is the equity curve for last 3 years. So there are some tough times. You can see these green lines. So these are the period when your discipline was tested. And if you have belief and conviction in your strategy, you'll just sail through and see the results. So here you can see some tough time here also around the COVID time. COVID time you earn, so every strategy will just give you good profit at this point of time. You can avoid it also, but you can have these times if you use the strategy for 5 to 6 years horizon. You will see such times. So I think we should consider these times also. Then this was a tough time. This was also a tough time, and we can say that this time is very tough. This time is also very tough. Although in last week it has given very good money around in a single set, that is two lots of bank nifty, either call or put, and one lot of nifty. It has given around 35,000 plus. This strategy has given this in 1 week. So what happens that few things which may come into your head कि हमने ऐसा क्यों किया, हम ऐसा भी कर सकते थे. You might be having some combinations running into your head right now. We'll just try to discuss and answer one by one all of them. So why this strategy when other profitable strategies are already there? Suppose कोई आके बोलता है कि सर ये strategy तो ठीक है, but there is some another strategy which is giving the same profit, the same drawdown, the same even better this hit ratio. Then why I go for this strategy? So my friend, I'll just ask you, directional strategies are always more profitable than non-directional. So फिर non-directional क्यों? So I think you must have got the answer. So you know diversification is also a thing. It is always better to deploy multiple strategy at once. So if you are having some strategy which is giving the same profits and थोड़ा इधर उधर max drawdown थोड़ा कम है या ज्यादा है, so you keep using that also. But if you are having another strategy which is not directly in directly correlation with your existing strategy, I think you should go for it. So if you are having some, if you gain some experience, you just try to have more than one or more than two, more than three strategies. So it gives you the benefit of diversification, and you can generate the consistent returns also, right? So use the strategy you think is more profitable, but give this one a try with a small chunk of your capital allocation first. So I'm not asking you that go and you start using this strategy. I'm not asking you to do that. So what you will do, you'll just check this strategy. आपके पास जो भी the things you have, you can just backtest this strategy as per your own methods and tools you are having. You can just backtest. You can just front test this strategy for 1-2 months, and if you think कि ठीक है ये strategy is good, then you can go ahead, right? So one more thing is एक और चीज है जो हमें ध्यान में रखनी चाहिए कि it is said that when a strategy is overcrowded, it starts losing its mojo, it starts losing its edge. So you have to stay prepared to adapt yourself. You must be having few strategies in your kitty that in one situation you are using strategy X, and in other situation you are using strategy Y. So you must have few strategies which you can use in combination, on we can use or you can use in different period. The second thing is why 915 price and not previous day close? Why this? Because 950, I'm in this, as far as this strategy is concerned, I'm an intraday player. I'm not factoring in any news which is which has come before the market opened. So I'm not taking the price of yesterday. I am for the sake of this strategy, I am an intraday player, and I will use the tools which is available in intraday, right? So that's why I have taken the price of 915. And this is very simple. You just have to check the journey from 915 to 945 for both the index, and which the index which is strong, you have to sell. You have to go and sell the put of that particular index. So why entry at 945 and not before? there are a few questions. We'll just answer them one by one. What if I take the re-entry? What if I take the equal amount of premium? Suppose you will say, sir, when I go and sell the put option of Bank Nifty, I am collecting premium of suppose 40,000, and when I'm selling the other side of Nifty, it is only 15,000 or 10,000 premium. So there is an imbalance of the premium. But my friend, in stock markets, imbalance, disequilibrium is an edge. It is a factor which drives the market. So this is the disequilibrium, which is the edge in the stock markets. The another question which may hit to your mind is, can I optimize this strategy? Yes, you can. But my advice is, don't over optimize some strategy. Keep it simple. Simple things do work as less people believe in them. But still you can do something like you can limit your max loss in a day. Suppose the strategy X, it is giving the max loss in a day is 15,000. You can just go and limit your loss to 8,000. That if you hit the max loss of 8,000 in a day, your strategy will exit automatically. You can just get it coded like this. You can take trades to next day also. You are doing this for intraday. Suppose you think that to take more theta benefit, to take more benefit of decay in premiums, it is profitable. You think that it is profitable to take the trade to the next day. You can do it also. But I have just kept this strategy for intraday only. Right? You can trail your stop loss also. Yes, you can trail the stop loss also. Suppose your profit is, you see that on screen your profit is 5,000. You can start trailing your profits. So these are the few things by which you can optimize the strategy. But don't over optimize it. Just try to keep it simple. So we'll just try to answer the questions one by one. So let's compare the various scenarios one by one and try to compare the results. Oh, I'm sorry. So this is the comparison. So these are the figures, and I'll show you the my backtested sheet also. So this is all the these things all are backtested. So what if I take the entry at 930 in place of 945? So your margin will be same. Instrument will be options in Nifty, Bank Nifty. Your base price is same 915. Entry time is 930 in place of 945. Stop loss is same. Exit time is same. So in 3 years, your profit is 5 lakh. So when you enter at 945, your profit is around 8 lakhs. But when you enter at 930, it is around 5 lakhs plus. Why this is so? Due to noise in early hours of the trade, right? MBD is 52,000 in that strategy, in our strategy, crossing strategy. So why I have given the name crossing? This is basically cross index strategy. So I have given the name of crossing. So return to MBD of this strategy 931. When we enter at 930, it is having the hit ratio of 53%. Your green days are fetching you at around 4,300. Red days you are losing 3,300. Your expectancy is 751. So our expectancy in that, our main strategy, crossing strategy, is 1250. What if I take re-entry? Only one re-entry. So after hitting a stop loss, suppose I sold the call at 100 rupees and keeping a stop loss of 125, and it hits the stop loss, and I'm taking a re-entry when the option price is again coming near 100 or at 100. So I'm entering the position once again. What happens when I'm doing that? So these requirements are same: margin, instrument, conditions. Entry time is 945. Stop loss is same. The total profit is around 8,19,000. That if I am taking one re-entry after hitting one stop loss, I am entering into that instrument once again when it reaches my original price. So it is increasing my profit by around 18,000. That is in 3 years, 18,000. When MDD is next drawdown is 57,000, return to MDD is 4.73, hit ratio is 57%. Green days are fetching me 4,500, red days are taking 3,200 back from me. Expectancy is 1,200. So I don't think, in my opinion, I don't think it is profitable that, yeah, or it is prudent that for a bare 18,000 I am taking the re-entry. It is not prudent for me. Then again, suppose after hitting one stop loss, I took re-entry. Suppose after hitting another stop loss, I am taking the re-entry once again. What happens then? Everything is same, but despite of taking one re-entry, I am taking here two re-entries. So I am facing one stop loss. I am taking re-entry. I am facing second stop loss. I took re-entry once again in that scenario. Entry time, exit time same, stop loss is same. Total profits is 8,27,750. So if I compare it with my existing crossing strategy, it is giving me 26,000 more if I am taking re-entry twice. MDD is 53,300, return to MDD is 5.18, hit ratio is 58%. Green days are giving me profit of 4,500, red days are giving me loss of 3,200, and the expectancy is 1,226. That I am expecting that I will earn 1,200 per day if I am using this strategy for a longer time. Then again, what if I take the equal premium? So what do I mean with the equal premium, as we have already discussed, but I'll just take you to my Excel sheet also. First, we'll discuss this. So everything is same. If I take equal premium, suppose by selling one call of Nifty, you are collecting a premium of 10,000. So you will just try to sell that number of bank Nifty puts that will give you premium of 15,000. Or on the other way around, if we say that suppose if you are collecting by selling one lot of bank Nifty put or call, whatever the situation may be, on the basis of the strength. So if you are collecting a premium of 15,000 in bank Nifty, so you will do that number of call option, that number of call options in Nifty, which will give you a premium of 15,000 collectively. So suppose one lot of bank one lot of bank Nifty is giving you 15,000 premium, and one lot of Nifty call is giving you premium of 7,000. So you will what you will do, you will take you will sell two lots of Nifty call. So it will give you premium of around 14,000. So here at one side you are collecting 15,000 premium in the puts of bank Nifty, and on the another hand you are collecting the premium in calls of Nifty at 14,000. So they are around same. So what happens if I go with this strategy? So your margin is same, conditions is same. But you are not taking the re-entry, because I'm comparing each strategy with our crossing strategy. Sorry. So stop loss is 25%, exit time is 3:10 p.m. Total profit is 5,33,000. So what is the MDD? It is 31,500. So in terms of next drawdown, it is better 31,500, because in our crossing strategy it was 34,000. Return to MDD is 5.65. Hit ratio is 65%. His hit ratio is very nice in this strategy, because in our crossing strategy it was 54%, if you remember that. 55%. Our hit ratio was 55%. In this strategy, your hit ratio is improves to 65%. But problem is there, the profits are less. That's why I told you that that disequilibrium in premiums is actually your edge. Suppose you are not ready to go with this strategy, and you say that I'm not going to take the base price as 915 price. I'll still go with the base price as previous day close. This PDC means previous day close. So what you are taking the 915 price as previous day close. So you are not taking 915 price, you are just filling the price of previous day close of the Bank Nifty and Nifty spots, and then you are comparing. What happens then? Everything is same, margin, instruments, but the base price is previous day close. You are not taking 915 price yet, you are taking the previous day close price. Entry time is same, 945, stop loss 25%, exit time is 310. Total profits in last 3 years is around 7 lakhs. In Crossing, we are earning 8 lakhs. Here you are earning 1 lakh rupees less. Next drawdown is 52,000. Return to MDD is 4.45%. Hit ratio is 54%. Your green days gain is 4320. Your red days loss are 2780. And expectancy is 1040. So you can expect to earn 1040 rupees daily on daily basis. So let's go to our Excel sheet. So this is my Excel sheet. Basically, this is the back testing I have done. So I took 915 price as base here. This is 945 price. On the basis of this, I have calculated this. At 915, Bank Nifty was 27,000. So by the way, this is the price of 15th of Feb 2019. 915 price, sorry, Bank Nifty 950 price is this, 945 price is this. This we don't need. Nifty 915 price is this, and Nifty 940 price is this. So on the basis of this, I have calculated Bank Nifty is in loss of around -0.5%, and Nifty, and for Nifty, BN for Bank Nifty is at a loss of -0.6%. So on the basis of this, we can observe that whether both indices are weak. Both indices are weak if you take them in isolation. In absolute terms, both are weak. But if we take the relative strength, Bank Nifty is stronger. It has fallen lesser than the Nifty. So what we will do? Bank Nifty is strong. It is giving me the result here. Bank Nifty is strong. What we will do? We'll just go and sell 2 lots of Bank Nifty puts and 1 lot of Nifty. So this is the gain. This I have calculated for next drawdown. This is the next accumulated loss. This is the peak, and this is the next drawdown. So this is I have calculated for the win or lose a day. This is other data. So let's go down here. So this is our profit, 8 lakh in our main strategy Crossing. So this is the max loss. So if you are not trading, if you are taking leave on the day when the spot Nifty is gapping down or gapping up by more than 1.5%. So this is the max loss you can incur. What you can do, you can just limit your max loss to any amount you are comfortable with. This is our hit ratio. 55%, which I have shown you in my sheet. This is the max drawdown, 34,000. Strategy. Profit day you are earning 4,600. Loss day you are earning 2,800. So this is the return to MBD. How I have calculated this? So I have calculated that this is the 3 years profit. I have converted this profit into annual. So I have divided this amount by 3, and then I have divided by the max loss I will incur. So what will I say that expectancy is 1225, right? Expectancy you have calculated by doing this. Return to MBD. Let me explain it to you. So to earn a sum of rupees, just wait, this is for 3 years. So to earn 2,67,000, I am ready to take a risk of 34,000. That I am ready to surrender a part of capital for 34,000 to take the gain of 2,60,000 per annum, right? So this is the return to MBD. Expectancy we have explained. Now the second one, 930 entry. This is this one. What if I take the entry at 930? Everything is same, but I'm taking the entry at 930, and on the basis of this price, your strikes will be different. It may or may not be, but it can. Rest everything is same. So you are earning 5 lakhs here, 5,07,000. Your max DD is 52,000. Expectancy is 751. What if I take the previous day close as base? So this is my previous day close. So I am calculating the strength of Nifty and Bank Nifty on the basis of previous day close. So I am comparing. This is the, just wait. Here I have forward to write this thing. This is previous day close for Nifty also. So these are the previous day close for Nifty and Bank Nifty both. On the basis of these numbers, I have calculated the strength of both indices, Nifty and Bank Nifty. So this is the profit. Just forget this. This I was trying to compare it with the existing strategy. So it has given us profit of 7 lakhs as per our strategy. It has given the profit of, yeah, this one, 7 lakhs. The max drawdown we face is 52,000. Hit ratio is 54%. Expectancy is 1,036 rupees, 1,040 rupees I have taken here. Yeah. Then again, suppose if I take the re-entry and everything remains the same, that my entry, exit, stop loss, everything. So what I'm doing, I'm taking re-entry here. I have included the profit of one re-entry here. This one, 27,000. Not 27,000. It should be some other. Yeah. Just wait. Yeah. This is re-entry one. Re-entry two. This is, there is some. This sheet is very huge. some data is missing, I think, in this. So I have copied some another sheet from my existing folder. But this is the main data that when I take the re-entry once, so it increases the profit of around 18,000, and when I take two re-entries, it gives me an extra profit of around 27,000. What if I do this strategy with equal premiums? This is how I have calculated the premium. I took the Nifty premium on the basis of the strikes I have taken and the options that my decided sheet is giving me. So this is the Nifty premium, this is the Bank Nifty premium. I have done the average of both the premium, and on the basis of this, I have calculated that how much, if I am going through Nifty, how much lots I need to sell. So this is the Bank Nifty lot. So every time Bank Nifty will be 1, because normally what I have seen that Bank Nifty is giving you more premium at the money. So sometimes it is giving you 2 also. See, it is giving you 2, 1, 2 in these number of trades. It is giving you are selling 3 lots of Nifty, and here you are selling 1 lot against 1 lot of Bank Nifty. So every time you are selling 1 lot of Bank Nifty. See, because normally Bank Nifty will give you more premium if it is at the money. That's why everyone is doing Bank Nifty, because we are getting more premiums in Bank Nifty. So in this scenario, we are earning a profit of 5,33,000. This hit ratio is better here, 65%. Even max drawdown is also less, 31,500. But expectancy is very less, 751. So this is basically expectancy is what our 930 entry is giving us, right? So there are some more variations in crossing which I found useful. So I thought that I should share these variations also with you. So when we know that, as I told you that the Bank Nifty is normally giving you more premiums at the money as compared to Nifty. So what if I go and take more premiums of Nifty in a single lot itself, right? So suppose if I'm going the first ITM, just wait, I'm just telling you the help of the example. What if I take one ITM of Nifty? So suppose open is this, and at 9:45 the price is this, and what I'm doing on the basis of this price, I should sell 16,950 strike price of call. But what I'm doing, I'm just going inside, I'm taking the first ITM of that is the ATM minus 50, this one, so that I can collect a better premium in case of Nifty. And in Bank Nifty, I'm doing the same thing as we were doing earlier. So this sheet is for ITM Nifty. So what it is giving us, we have to sell put of the stronger index, first ITM. In case of Nifty, first ITM means, suppose as per decider sheet, your calculation is coming that you have to sell the 17,000 call. You will go to the previous strike and you will sell 16,950 strike, right? And Just a minute. This is 8 p.m. taking on 18. Yeah, this is it. So and we will sell call option of weaker index. We will just trade 2 lots in Bank Nifty. We will not trade when the gap is more than 1.5% in Nifty spot. Base price will be same 915. Entry time is 9:45. Stop loss is 25%. Exit time is same. Hit ratio is 59% when we were having 55% in our crossing strategy. MDD is 35,000. In that, it was around 34,000. Return to MDD is 7.9. Profits are a bit increased in case of this. So we are getting 8,39,000 profit. Expectancy is 1280. This is the one, 8,40,000, 8,39,000 profit. In that case, 59% accuracy we are getting. Expectancy is 1280, like this, right? Suppose in another way, what if I think that I am going to trade the first item of Nifty, and if I go some more, if I want to take more premium in Nifty and less premium in Bank Nifty, so that my premiums are a bit balanced. So what I do, I will just go and sell put of stronger index. So if Nifty is there, I will go and sell first item of Nifty and first OTM of Bank Nifty. Rest everything is same. Our hit ratio improves at 63%. MPDs improves at 31,800. Return to MPDs, it is also improved 8.4%. Profits are 8 lakh. Profits are almost same. My expectancy is 1225. Right. So this is on the basis of same data. This is one. Eight lakh 5,000. Expectancy is 1224. Hit ratio is 0.63, 63%. So if we compare all of these strategies, we find that this strategy is best amongst all, right? So what are our core learnings of that? See, the main purpose is not to give you the best among the strategies. Every 4 out of 5 strategies are profitable. It's up to you what frequency you want to set to your trading style. So you may take good amount of risk or drawdown to earn good amount of gains, or you may wish to take lesser returns and happy with lower returns also. So you have to set the frequency of risk, returns, hit ratio, expectancy, and you can decide a good strategy for you, right? And of course, it should suit your routine also and your comfort zone also. So basically, it's not about whether strategy A is better than B or B is better than C. It's about creating a strategy which you can follow consistently and with least amount of psychological stress, psychological ups and downs. Further, one advice for those traders also who wants to trade in multiple lots, multiple sets of lots. Basically, I'll just, because we are selling 2 lots of one index, so we'll just rather say it a set. So you can do one thing, you can make the entries in staggered manner. Take gap of 5 minutes or 10 minutes. It will spread your positions also at different prices, and you can take benefit of diversification, right? Execution is also important, so it should be mechanical and without emotion. So it is always better to get the strategy coded so that emotions do not make hurdles to your trading success, right? So what are the key learnings for our today's session are that you have to have a diversification mindset. You can take multiple strategy at work for you. Entry time, it doesn't matter if it is within a small range, 5 to 6 minutes, 5 to 7 minutes. It basically consistency does matter, and you have to keep yourself ready to adapt the changes. But don't be a jumping jet that one day you are going for one strategy and another day you are going for another strategy. So you are facing a drawdown of 4 or 5 days and you are moving to some other strategy. Don't do that. Every strategy is profitable, but you need to set the frequency right. So the frequency within profit, risk, and comfort. Profit is everywhere. You need to adopt a strategy which suits your routine and comfort. And best strategy is always one which you can use consistently and with less psychological ups and downs, as I told you. Right. So with this, my presentation is over. So over to you, Ashok sir.
Thank you very much. So, friends, super fast index traders require a super fast platform and application for their trading journey. Can you go ahead, please run the video for a couple of minutes?
Yeah.
Meanwhile, Sachin, team from Espresso, Ravinder.
Yes, sir. I'm here.
All right, give me a minute. Let us finish the video.
investment in securities market are subject to market risks. Read all the related
Can
documents
you please
carefully.
jump to the slide, please?
Yeah.
Sounds good. All right. So can you jump to the next slide and run a slideshow?
Yeah. Just a
No. Do an escape.
minute.
Do an
Just,
escape.
just a second. Just.
Yeah. One more jump. One more. Ravinder, over to you.
Okay. Hello everyone, my name is Ravinder Hundal from Espresso onboarding team. We are Espresso and we are committed to help traders. Espresso is discount broking company under a Sharekhan group of companies. We have a very unique offer for traders, pay when you profit. So as an intraday trader, you don't have to pay brokerage on loss making trades. For more details, you can check our website myespresso.com. Today I'm going to talk about Binge, which is Windows-based desktop application designed for pro traders, best-in-class experience, real-time feed, multiple market scan, and many more features. For more details, you can check out our YouTube channel Espresso Invest, where we have demo videos for all features. Option trading is about crunching numbers, but here we try to simplify for traders. We added performance, so you can find out on which strike long short build-up happening, live IV and easy order placement from bid ask price. Also, you can drag drop strike to bulk order for strategy orders. We are developing more advanced feature for option traders. Predefined order setting is about to set your order details once and use that while placing every order. By doing this, user can control their risk which is involved in trading. User can set order type, product type, buy, sell, stop loss trigger, and book profit. For account opening and more details, you can visit our website myespresso.com. Thank you.
Thank you very much. Can you please move on to the next slide, my friend? Harish?
Next one.
Next one. Yeah. Okay. So friends, here is the update on status on the Amazon Fund of Trading Strategies. It's a 100% algo strategies for traders. The salient features includes most of the strategies are something with inbuilt risk management. Everything is back tested, validated, absolutely zero curve fitting, zero optimization, no manual intervention, 100% plug and play system, and the whole project is offered as a strategy as a service. And it's not about one strategy, it's a combination of 5 to 10 strategies punched together for a smoother equity curve. For more details, log into www.statuson.in and the relationship manager will get in touch with you. Thank you very much. Next slide, please, Harish. Okay, so this is a long pending thing. Please join the Telegram group for all Nifty Banker alumni. Go and search for MC Nifty Banker 2.0 bot in your Telegram. And if you have all the people who are enrolled into the event from Money Control, you'd get an opportunity to join the channel there. And all the people who join this program through Traders Gurukul, please go and join this particular channel. And all the relevant documents would be uploaded in these channels along with the passwords. All right, and it will be available for reference. And some of the documents that are pending includes one, the AFL code by Kushal Jain, the Pine script by Vivek Gadodia, and also the other aspects which would be relevant for you guys for all the 12 sessions. So all those things would be probably sent to you by tomorrow. We will take care of that. All right. Next slide, please. Great. Here is an amazing and very important announcement that is coming up from the family of Traders Gurukul. Friends, this is something which we have been planning from quite some time. We are pleased to announce Traders Conclave 2022, India's largest retail stock traders and investors residential conference. This is going to happen in the month of September 23rd until 25th in Hotel Sheraton Grand Whitefield, Bengaluru. It includes 3 days of learning, 8 interesting, detailed, extensive sessions, competition, quiz programs, prizes, awards, and ultimately celebration. Next slide, please. So the friend, this event is going to start in about 236 days from now. All right, it is a great opportunity to learn, interact, collaborate with some of the leading stock market traders in this country and also some of the best known stock market speakers in this country. This would be a deeply interactive session which are specifically designed to empower retail traders like you with best in class education and absolute hands-on experience. Next slide, please. So here are the highlights. Please jump one by one. So the speakers includes a 200 crores quant fund manager, a master predictor and a Gantt disciple, one of the well-known Elliott wave technician in India, a $1 million fund manager, and one of the best known positional weekly option writer, and also a straddle expert with who punches almost 100 lots every day. You know, these are the different kinds of expertise. These are the different kinds of exposures the speakers are going to drive. It will be almost like a detailed session, or at least 3 hours session from each speaker. Next slide, please. So these are the 8 speakers who are going to join us. We're going to add few more speakers, more details to follow. Next slide, please. Okay, so ideally, friends, you are going to stay in a 5-star hotel for 3 days and 2 nights with all 8 meals included, your breakfast, lunch, and dinner, everything included. With the cost is officially about 20,000 per person. Okay, and you will get a VIP access pass to the conclave with lifetime education, which is quite valuable. And this is the most interesting thing. All of you would get 25,000 worth of brokerage credits without any expiry date from our broker sponsor. Lifetime access to all the live recording events in Traders Gurukul. That is also something which you would have. Next. And you will get a great opportunity to collaborate with almost 400 full-time, up to 400 full-time stock traders, and you'll have great learning, great interaction. And there will be 3 important awards to be won, which is the Champion of the Conclave Award with quiz for prizes worth almost 1 lakh rupees for 3 people. And next, a lot of goodies, mementos, gifts that we are going to sponsor from our partner organizations. And definitely at the end of this conclave, if you are a serious enthusiast in the speculative market, the derivative market, rather the stock market, you'll definitely carry great memories, experiences, and finally celebrate, which is happiness. So ideally, mathematically, you will get benefits worth 55,000 plus lot of valuable knowledge and best memories together. And the highlights of this whole program is that, okay, the speciality is it is not a fast track session where the speaker will have 1 hour, 2 hours. No, it is like a morning show, noon show, matinee show, evening show. All right. So ideally, only 3 speakers will talk whole day. All right, and each speaker will get minimum 3 hours to talk, where he will spend 1 hour explaining all his concepts. He will spend another 1 hour giving hundreds of examples, and final 1 hour will be Q&A. So minimum 3 hour session, and after every session we will have the star of the session, the star of the day, and the champion of the conclave awards would be published. We will have a mobile app where you will have to real-time participate in various quiz and competition. That app will list the top 10 guys who are fighting for the ultimate throne, and in real-time basis it will start publishing the performance, and finally you will have an opportunity to emerge as the champion of the conclave. Plus the champions might also get an opportunity to become the speakers in the upcoming conferences of Traders Conclave. Can you guys guess the price of this? Can anybody guess what would be the great price for such a program, which is first of its kind in the country? Okay, it is of course on a room sharing basis. The official price for this event is 34,999. Okay, but there is an early bird offer only for the first 100 tickets. Okay, the price is going to be 24,999. This includes 3-day stay in the 5-star hotels with all the meals included. Backslide, please, for a minute. Go back, please, Harish. Okay, so it is going to, because the cost of hotel itself touches about 20,000 plus the brokerage credit and things like that. You will have an absolute paisa vasool moment, and the knowledge would be immense, and you will have a great alumni meet with all the participants. Next slide, please. So don't miss the biggest traders event in India, because this is a never before event with brilliant hands-on experience for all traders. Next. An event where your investment yields huge dividends. You will almost earn back at least 55,000 worth of, directly measurable goods worth of 55,000 plus benefits, additional benefits of knowledge and other things. That is a huge ROI. So go ahead, grab it soon. Launching it first for the Nifty Banker participants only. The website actually went live today. So there only about 100 seats would be available for 24,999, and the prices will jump after every 100 tickets that is sold. Okay, for more details, log into www.tradersconclave.com. okay, that is our website address. And for the next, so the price official MRP is 34,999. So but we have kept the price at 24,999 as an early bird only for the first 100 tickets, because we are doing this event for the first time, and definitely this is not going to be a serious profit seeking event. Rather, we want to project this as a benchmark event across the nation, particularly in the world of financial earnings. Okay, next slide, please. All right, so that's the information. Go ahead, grab the early bird seats now. For more details, go to www.tradersconclave.com, and the price is not going to be 34,999. It is going to be 24,999 only. All right, and this will continue until we sell 100 tickets. Once 100 tickets are sold out, the dynamic positions pricing will come into play, and the price will keep jumping after every 100 tickets. All right, so this will be one of the greatest experience that you would have, and more or less you are meeting some of the real-time fund managers. All right, people who trade sizable funds. You're going to meet and experience them, and it will be a solid real-time experience. Next slide, please. Okay, the conclave manager is Mr. Fazil. His mobile number is 6360107848. All right, you guys can reach out to him for any questions you might have. He will be more than happy to help you out. Okay, so that's the details. You can reach out to Fazil Ahmad. He is the director of the events. He is going to drive Traders Conclave officially. So you can reach out on his mobile number for any help. And the joining link is provided in the Traders Conclave website. Go ahead, grab your seats, and I am sure you will definitely not be disappointed. All right, that is for sure. Make sense, friends? Okay. Harish, over to you for the next slide.
I'm
Cool.
open to
With this,
all your queries.
great. With this, we come to the end of the session. So please go ahead, shoot your questions to Harish, and feel free to shoot your questions about Traders Conclave also. You can do that as well. Okay. So let us take the next 20 minutes to answer the questions for Harish. And with respect to the strategy that he presents, I believe in quant models. Thank you, Harish, for your lovely quant story today. I more or less I like the flavors that you presented. Instead of being very vanilla and specific, this is something really interesting.
Thank you. Thank you.
Brilliant, mate. So questions, friends, over to you. Okay. Go ahead, shoot your questions on the strategy. Meanwhile, there are some questions on conclave. Suvarti is asking, are the cost on room sharing basis? Yes, it will be on a room sharing basis. That is why the price is so low, because per person cost itself is more than around 20,000. We need additional money to manage all the speakers, travel, blah blah. Okay. So people, do not forget to register in the bots. Okay, Wherever you purchase the conference, you go ahead, subscribe to the channels, you will get all the information there. Harish, here is your first question. Why
Yeah.
Bank Nifty is too lot? Is this because Nifty is 50, Bank Nifty 25?
Yeah, actually, firstly, I started with this thought only, but then I realized that there is a edge in between this. If we take two lots, because I back tested with single lot of Nifty and Bank Nifty as well, but it was giving me good profits when I'm taking the two lots. And this obviously this is the basic reason when I started out, that Bank Nifty is 25 and Nifty is 50.
Very nice. Okay, so here is a question by Johnson D'Souza. Instead of selling, can we go for buying the option, as relative strength will come to know by 9:45?
Yeah, actually, I told you the benefits and disadvantages of both option buyer and seller. If we are buying the options, you have an inherent probability of winning of only 1/3. So if I take an example, suppose you are buying a call of some stock, you will be earning some money only if the stock moves up and with a momentum. So if it stays there at the around the same price, you will be losing, and if it goes down, you will be losing some money. So it is only 1/3 probability when you are an option buyer. On the other side, if you are bullish on some stock and you are selling a PE of that particular stock, so whether it goes up or it stays there, you will be earning in both the condition due to limited time of expiry. At the expiry, your options will be zero. So if your stock is going down, only in that case an option seller is, and or we can say a put seller is in loss. So that's the edge for this option seller.
Sounds good. Okay, question by Vishal Malviya. Which platform have you used for backtest?
Friend, there are a lot of platforms, because no single platform in my thinking is giving this independence to backtest such type of strategy when you are going with a strong index and a less this weak index at one go. So I need to merge the data from 2-3 websites, and then I was able to backtest this strategy.
Sounds good. Question by Latha. How to manage when the lot size is changed in future?
How to manage?
How to manage whenever the lot size changes? So you need to give her the perspective as to
you
what she
have
should do.
you have to be ready for any you have to adapt yourself as per the market situation. So if the strategy starts losing its edge, then we can move to some other strategy, or we can make some adjustment in this strategy also.
Absolutely. That is the most important thing. It's not that you make a strategy and the strategy will start making money for the test of
And
time.
very nice question by Lata. Very nice question.
Hats off, Latha. Question by Sanjay. Can this be applied for stock options for two industry sectors doing well and not doing well that day?
I personally will not look for any this strategy in some stocks. I'm just doing in Nifty and Bank Nifty, so I'll not recommend to do this strategy in stocks. But if you have any strategy of option selling and you are comfortable with it, then you can just go ahead. But this strategy should be must be used in index only.
Okay, sounds good. So the next question is from Harsh Investments. How to hedge both position, as we can go wrong on both indices, as we sold call in Nifty and Nifty goes up, and sold Bank Nifty, sold P and Bank Nifty goes down. So how can I minimize losses?
But I think we have already discussed it, that you can do few things. You can put a day stop loss as well. So if you are our strategy is giving a max loss of 12,000 a day, and you can put a strategy stop loss of around 8,000, 9,000 as per your convenience, so that your loss is minimized as per your convenience. You can do that. You can trail your stop loss, and you can just you can move your stop loss also. You can trail them. like this you can go for this.
Sounds good. So let me move on to the next question. What is the minimum capital for this strategy? By Suranjit Biswas.
So the minimum capital requirement, I think Mr. Surender has missed the early part of the webinar. No issues. The minimum capital requirement in the normal circumstances, you will be needing around 3,90,000 for one set of this strategy. But because our max drawdown is around 34,000, what I have done, I have taken the 1.5x of our drawdown and added to the capital requirement of that, so that we can have after suppose you started this strategy and you face a drawdown of 34,000, then it should not be stopped. So always try to keep more margin with any strategy. So I have just taken the 1.5 times of the max drawdown and added to the actual margin requirement in the strategy.
Sounds good. All right. So further questions. Sir, a gentle request. Can you kindly summarize finally how many Nifty and how many Bank Nifty lots to be traded by Nilesh Jangam?
See, your margin is 4,50,000. What you have to do, if it is Bank Nifty, you just have to go with 2 lots of that, and in Nifty only a single lot. So if you are selling puts of Bank Nifty on the basis of strength, that the Bank Nifty is strong on the basis of our decider sheet, you will just sell 2 puts of Bank Nifty, and against that you will sell 1 lot of one lot of Nifty. And if the Bank Nifty is weak and the Nifty is strong, then you'll just go and sell 2 lots of call option of Bank Nifty and 1 lot for put of Nifty, and all the ATMs.
Sounds good. So let me pick up some more questions. Martin is asking, sir, can you please explain re-entry?
Re-entry, yeah. So suppose you sold 2 puts of Bank Nifty at 100 rupees, and your stop loss is 25%, that is 125. And suppose after a few minutes your stop loss gets hit. So your option is around 125, and you are out of that particular leg due to the stop loss. So when the price of this leg, the stop loss one, suppose it visits again to the original price of 100 rupees, your original entry price. So you will just enter the that particular leg once again. That's the re-entry.
Sounds good. So there's a question by Rajini. When one side stop loss hits, other side should we exit?
No. This is one leg stop loss strategy. I think I made it clear. This is one leg stop loss strategy. So if we are you have hit stop loss at one side, your other side will go on until 310, or if it hits the stop loss.
Sounds good. So the next interesting question by Sankar. Sir, how to find stronger for call, weaker for put? How do I find it? What is the rationale?
The rationale is we are taking 915 price for both the indices, and we are taking 945 price both the indices. So on the basis of 915 price, how much stronger the index has gone. So suppose 915 price, on the basis of 915 price, I think I should explain it with the help of the example. This is right. So suppose at 915 the Nifty is 17,062 and Bank Nifty is 37,058, right? At 945 the Nifty is 16,964 and Bank Nifty is 37,163. So this is a change with respect to the open price of that particular day, not the close price of previous day, as the exchange is calculated. We are taking the base price of 915 for both the indices. See, and on the basis of this, we'll just see which index is stronger than the other one. Both can be strong on that particular day in absolute term. But if we see in the relative sense, we have to check which index is more strong than the other. Like in this case, that Nifty is minus 0.57% down, and Bank Nifty is up 0.28%. So it is clear that Bank Nifty is strong, and in that case, we have to sell the ATM put of Bank Nifty 2 lots, and we have to sell the ATM call of Nifty single lot. This is how we do it.
Superb. Let me pull out some more questions. Okay. Sir, you're assigning a stop loss of 25 on both legs. If yes, has the backtest considered such cases where both legs fail?
Can you just come again? I missed that.
Okay. Sir, you're assigning a stop loss of 25 on both legs. If yes, have you considered a scenario where both legs fail, where probably you don't get to take away the stop loss? That's an outlier, you know.
Yeah, that's why our hit ratio is 55%. That means the out of 100 trades, the 45% are the scenario when you are into loss, and there are as per my observation, there will be around 20% of your trades when you will hit both the stop losses. Only and 10% in 10% of 10% so scenario by no stop loss will be hit, and in around 70% scenario only one stop loss will be hit. And that's why our ratio is 55:45.
Brilliant. So, Subodh Bohra says excellent and clear instructions.
Yeah, thank you so much.
Harish.
Thank you.
Okay, here is a request by Suranjit Biswas. Harish ji, can we get that decisive Excel sheet that you are showing in the webinar? Would you be in a position to share it with us?
Yeah, sure. I don't have any problem sharing the data.
Thank you very much. So you can email it to me. I will say make sure it reaches to the masses.
Sure. I'll do that.
Brilliant. So one more guy is asking, can you show how to buy the Traders Conclave ticket? Dude, can you please go to tradersconclave.com? On the browser. Meanwhile, friends, go ahead, keep shooting additional questions. So Vicky Garg is asking, any preferred day for trading this?
Only when Nifty is gapping up or down by more than 1.5%, you have to just sit idle and see. Otherwise, you can trade it at any single day, you know. And if you wish, you can just avoid trading just before budgets and elections. Just like I'm doing from last 2 days, I'm not trading, and I'm not even planning to trade for till the budget day. You can just avoid those days because the chances of getting the stop loss hit are more on such days.
Sounds good. So can you please go to the browser once and type tradersconclave.com? Harish?
Yeah, just a second. Traders Conclave, right?
Yeah, tradersconclave.com. Yeah, perfect. That is the website. All right. So India's largest retail event, 3 days, 8 sessions, competition, quiz, prizes, awards, and celebration. In fact, we are building a beautiful mobile app to create this whole program interactive. There will be a challenging championship kind of a scenario for everyone to participate. Dude, just click on book your seat. Okay, so go little down. That's the early bird 24. Little down, click on buy. Buy now. That's it. So friends, that will directly take you to InstaMojo. The price is 24,999, which also includes your 18% GST. So which means your official price hardly 22,000 only. So this is the most greatest offering ever done, and an amazing product packaged with lot and lot of insight into the whole program. Okay, so we have 100 seats, and this will stay till maybe end of Feb. We'll either keep 100 seats or end of Feb. That would be the timeline, and then we will go for the dynamic ticketing model. But spend some time on the website. I'm sure you'll understand the beauty and power of this program, and a lot of things are coming up. And any questions, feel free to talk to Mr. Fazil, our webinar manager. All right. Sounds good. Yep. So more questions, friends. Let me pick up. Okay. Dinesh Lada says many times market trends in one direction for 23 days. Cannot we continue the transaction for next days instead of day trading?
Yeah, you can do it. You can do it. In fact, on the basis of some data, I came to the conclusion that it is also beneficial if you take your positions to the another day also. But I don't have the data that I can comfortably say you. But on a few days data, I just observed that. You can just try it.
Superb. Excuse me. Yes, Mr. Kotamurthy. He's asking Ashok, is the amount inclusive of GST for Traders Conclave? Yes. That is inclusive of GST only. All right. So, okay. Vishal has an interesting question. How to handle a situation when 2 times MDD is broken this system?
When 2 times MDD is broken,
Yeah.
then you have to increase your capital. Or one thing you can do that you can just keep 2 times MDD and add it to your margin while doing this strategy. As I have taken 1.5x of your MDD and added it to the exchanges margin, you can just do it twice. But it will not happen in this strategy because this data is backtested on last 3 years data. So this is the max 34,000. You will be your capital will be down, and we have already taken 1.5x of this 34,000. So I don't think you will be in such situation that you will be down by 2x MDD. But for the sake of this comfort, you can just increase your margin for doing this strategy.
Superb. So the next question is from Ravindranath. Are the options weekly or monthly?
Yeah, these are weekly options. These are weekly options.
Yep. All right. So another question is, this question is for organizer by Zahir. Before starting this program on enrollment day, you were saying about order flow. What happened to this? I never spoke about any order flow. because order flow was never a part and parcel of the program. So I don't remember talking about order flow and uh, market profile. Zahir, that's for your update. Okay. So everyone is asking Ashok, what about yesterday's recording? Rajini, the yesterday's recording would be posted. Don't worry about it. So there is one question by Harish. Ashok, I am from Bangalore. I would love to attend your traders conflict. Can I skip the hotel stay and get discount on ticket price? No. The beauty lies in staying in the program and spending time with all the participants. There'll be amazing event. It will be a whole day event with lot of learning and interactions. Okay. So it is going to happen far away in Whitefield. It is a great value add. All right, try to be with the crowd. It will be an amazing experience. I've attended some conferences before. Based on my experience, I have packaged this beautiful story, and I want to showcase this to you guys on the day of the event. It is definitely not going to be just yet another event. It will be an amazing experience, and the beauty is I have ensured the packaging is done in such a way that the price is nothing much lesser than the cost price. Okay, because you're getting the whole fee in the form of brokerage credit, plus you're going to stay in the star hotel and all the meals included. The cost itself is around 20,000 for the hotel. Okay, so the 25 includes all the things put together. Okay, it is driven at almost at the cost price because we want to make this event happen and showcase how a massive event of this kind can be done. So that was my motive. Harish, that's the update for you.
Yeah.
And one question by Rajesh, can we carry forward the trade with hedging?
Carry forward to the next day. I think I have already answered this query.
Okay, here is one interesting question by Lakshmi Kantanvi. I like this question. How many times both stop loss hit? How many times both profit hit?
As I told you, as per my observation, 20% of times your both the stop loss will be hit, and in around 8 to 10% you will get premiums from the both sides.
Okay.
But what happens in such type of strategies, because if you are having a V shape or M shape or W shape, only then the chances of getting both stop losses hit are very high. So if you are getting a trending day, you will be in profit, whether it is it is an uptrend or a downtrend. And if the market is moving in a no direction, then you will be in profit. So only the days when V shape and V, M and W shape trend you are looking, you are observing, only on those days you can face both the stop losses hit.
Okay. Okay, so so just a second. So there was some questions where the question was how can I so how can I pay advance payment? So don't worry, such questions would be addressed by Fazil. Please go ahead, first Fazil. He will be able to help you out, because yes, event is in September, so you don't have to pay full money. Also, you can even block your seat by paying 10,000. That can be done. Mrs. Kalpana, I recognize your point. Sorry, I do not have I have not made the setting in the system. Maybe tomorrow morning we can do the setting. Okay. And Yogesh Shirode asking, who is the broker sponsor for Traders Conclave? Yogesh, we are still working on it. We will update you. Okay, we'll update you. Okay, we will definitely update you. And Fazil is there to guide you. For any other queries, Fazil will be able to help you. All right. So any other questions, friends? Go ahead. Be it about the current topic, even if you want to know about the event also, more than happy to help. All right. So let me look at some more questions, buddy, for you. Mm-hmm. So Amit is asking Ashok, if I want to enroll for conference but want my wife to stay with me and not part of this, how can it be managed? No, she will have to be a part of the conference also. The same price holds good, Amit, because these kind of variables, it is very, very difficult for us to handle. You bring her, I am sure she will not be disappointed, because there is many great things that would be offered on the program. Definitely she will have a great time. Okay, there is a beautiful question. Ashok, what if any issues happen because of the COVID and other things? If that happens, we will reschedule the event. We will put it at a redo it at an appropriate time. Because this is an annual event, it happens every year. If government asks us, we will definitely do that, and not at all a problem. It will be there. It will happen for sure. Yeah, on another date. That is understanding which we would do with the event manager in the company. So that is a story, friends. All right. So Harish, this question is for you from Gopal. He's asking, what about profit on expiry day?
What I have observed that profit on expiry days are not much attractive in this strategy, but if we are doing this strategy for a long time, it doesn't matter. Or what you can do, you can just use any other strategy on expiry day which gives you more profits. But I don't think, I think for one single day I should go and choose on any other strategy if it is giving you good profits in applying this strategy on daily basis for a longer horizon.
Noted.
By the way,
And
this was a good question.
okay. Sounds good. So friends, any more questions? Okay, is one more question by Abhay Gupta. Ashok, I am not in India. Suppose I book the tickets, and what if I am not able to come due to travel restrictions? Will you give me a refund? Yes, we can do that refund thing. If there are genuine reasons, we can address it. Definitely not a problem. Great. So I hope every one of you enjoyed the learnings today. All right. If you want to reach out to my buddy Harish, you can follow him on Twitter, or you can also reach out to his email harry007@gmail.com. Okay. Harry, can you put the thank you button on the 59th slide so that
Yeah.
people can make a note of Fazil's number. So friends, Fazil is the event director for Traders Conclave. Go ahead, buzz Fazil, buzz him on WhatsApp and Telegram. He'll be able to help you out. Yes, Pankaj, you would. So Pankaj is asking Ashok, I'm in UAE. If I register, will I get recordings of all 3 days? Yes, we are going to record. We are going to telecast it live for sure. So wherever you are across the world, you can watch it. Okay, we will process your brokerage credits and all your goodies would be couriered to the nearest house in India. Of course, I can't send it to UAE, but definitely we can courier it to your local home. So Kotamurthy says, Harish, thank you for a very good session with thorough practical values. Appreciate you.
Thank you so much. Thank you.
Okay, so Kunal is asking, Ashok, what should be the minimum amount to block my seat? Just pay 10,000. That's good enough. Okay, not bad. Already close to 10 tickets sold out. Pretty fast. Appreciate the trust you guys have on Traders Gurukul and their programs. Appreciate it, friends. And we are working hard and building a lot of applications here. Of course, it takes little more time, but eventually we will deliver an amazing end-to-end program. Okay. Cool. I think we can kick off. If there's any other questions, let us know. Last 5 minutes left. So Harish, kindly share the decisive Excel and also the output files. So we
Sure.
will be posting it to all the people.
Yeah, of course I'll do. And still, if you have any query after watching this session, some queries comes into your mind, just reach me out there. I assure your query will be answered. So I think you must have noted my email ID and Twitter ID also. You can just shoot your query to my email, and you can just contact me on Twitter. You can just DM me your query. So your all queries are welcome.
Brilliant. Sounds good. So friends, with this, we officially come to the end of the last but one, which is the 11th session of the conference. Harry, my friend, thanks for the insightful session. On behalf of all the participants of Nifty Banker 2.0, the Money Control Pro team, the Espresso team, and all the family members of Traders Gurukul, we extend our gratitude for joining us and sharing your impressive knowledge. Thank you very much, Harish.
Thank you so much, Ashok sir, for inviting me here. Thank you so much.
I think you are speaking for the third time, bro.
Yeah, for third time.
Sounds good. I wish we will connect again, maybe 30 times in the future.
It'll be a great pleasure for me.
Thank you so much. So friends, that's the story for today. I hope every one of you enjoyed the show. All right. I will see you all tomorrow at 8 p.m. sharp with yet another interesting session. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Good night.